Hello, I am Mijun from Beijing Jushi University. Today is June 10th and let's begin the Beijing Jushi News. Today we once again welcome Mijun, who is here to analyze United States stock market trends without any changes. Everyone, I'm not sure if you watched the interview video I uploaded 2 or 3 weeks ago. At that time, I interviewed Jason Huang, the author who wrote the autobiography of Nvidia Chief Executive Officer Jensen Huang, directly. I conducted the interview at the Mijun channel with Stephen Wheat. If you are an investor who is interested in Nvidia or mainly invest in Nvidia, I highly recommend that you watch this video at least once. During the interviews I have conducted so far, I personally found that there is a lot of very useful and valuable content included. However, this video is a bit long. The interview lasted about an hour and a half, and even after I edited it, it still exceeds an hour. So there's quite a lot of content included. This time I'm going to share this content and give you a little more context. Before the 1 hour mark, I shared some of this on my YouTube channel's post, and this time I've written 2 newsletters. The first one is the ebook I just introduced, which is a summary of the autobiography of Nvidia's Chief Executive Officer Jensen Huang, and it also contains a very deep and meaningful interview with Steve Vitta. I've organized the key points into an ebook. I've also prepared one more ebook. What this is that I do a live broadcast once a month for my paid online members. But in last month's live broadcast, there were a lot of important personal questions. So I had a good opportunity to fully express my personal investment philosophy and strategies that I have. So this time, I thought I would gather various stories from the live broadcast into one book and share them with all of you. The free application period for the ebook is from June 9th to June 18th, and I will make sure to send it out on June 19th so you can receive it on that day. There is an application link here, so please click the link and send me your contact information. I will organize the 2 ebooks neatly so that I can send them to all of you. This time, I put a lot of effort into the ebooks, so I made them neat and filled them with very useful content. I hope that as many of you as possible sign up and get help with your investments. Now let's get started with today's big investment news, prepared for June 10th. I'll begin by summarizing yesterday's United States market trends. First, let's examine the S&P 500 chart. It was mixed, right? It seems like some sectors went up while others went down. Fortunately, the tech stocks we care about generally performed well. Of course, Apple, Broadcom, and Meta went down. Most megatech companies recorded declines, but yesterday, tech stocks and semiconductors led the market. That's how you can see it. And there's one more thing that stands out. If you look at the performance by sector in the market, actually, the S&P 500 was almost flat yesterday. The Nasdaq 100 also rose, but only by about 0.15%. However, among the indices, the small cap rose by 1.07%, and microcap stocks, which are low-cap stocks, also showed a significant increase. Let me say that again. Are you saying that small-cap stocks went up? There must have been some positive news related to the United States economy, so we can make some guesses about the reasons. Alright, then let's take a moment to check what kind of news there was related to the economy. First of all, yesterday there was a United States-China trade negotiation in London, and the positive news was that these trade talks are progressing smoothly. Take a look for a moment. The United States side is mainly discussing the resumption of imports of key Chinese goods, and they are also considering lifting some restrictions on United States-made product exports. Of course, experts in the market say that not all issues will be resolved at once, and this is a dominant opinion. Well, still, it's a good thing that talks are starting. So, the United States and China are currently holding trade negotiations, and the market is responding positively to this. Well, that's not all. Yesterday, at the New York Fed, they announced their expectations for inflation, but as you can see from the graph here, everything is dropping. The first graph shows the 1-year inflation expectation, the second is for 3 years, and the third graph is for 5-year inflation expectations. They're all dropping sharply, and this decline in inflation expectations is a very positive sign. The reason is, if inflation expectations go up, people will have to pay more money in the future than they do now to buy goods or services. When that happens, the quantity people want to purchase immediately rises, causing a sudden surge in demand. That means if inflation expectations are high, there's a greater chance that actual current inflation will also go up, so we can see that this can have a negative impact. If inflation expectations fall, there's a higher chance that actual inflation will also decrease. This is another way to interpret it. Yesterday, there was a lot of very good news reported about the United States economy. This time, it was the results of a survey conducted with CEOs of American companies. In April, 62% of United States CEOs were concerned about an economic downturn, but recently, that number has dropped significantly to just 30%. Also, the percentage of CEOs expecting growth in the United States economy was only 23% in April, but now it has more than doubled to over 40%. So, as CEOs running businesses on the ground are presenting such an optimistic outlook that the United States economy will do well in the future, they have made positive forecasts mainly for consumer demand. This is how we can summarize the market yesterday. Now, as for the Korea Composite Stock Price Index yesterday, it went up a little. It was at 72 yesterday, but it rose to 73.6. 49.4% of stocks showed a technical rebound, with prices above the 201-day moving average. About half of the stocks have recovered, while the other half remain in a downward trend. This summarizes the current market situation. As mentioned yesterday, it's crucial that the psychological support level of 6,000 was not broken, as the index remained above 6,000. This is something we can think about once again. Now, this time it's VIX. The volatility index remains very low after yesterday. At 17.44, it's showing a much lower and significantly more stable market than the historical average. The fear and greed index remains cautious, similar to yesterday, but hasn't reached extreme greed levels. It's just maintaining a moderate neutral state, and that's what it looks like right now. The market score is also about the same. It's been hovering around 76 or 77, so the fact that it hasn't risen dramatically is actually quite positive in my personal opinion. Despite a flat market index, TabTech saw strong United States support and significant gains yesterday. B2 performed the best, rising by 8.48%. Secondly, AMD rose by plus 4.77%, Strategy by plus 4.71%, and Tesla surged by 4.55%. There was a reason why Tesla performed so well. Yesterday, President Trump said something like he could talk to Musk, that he's pro-Norfolk, and made comments like that. So, in the market, there were concerns that Musk and Trump might completely break up this time. But fortunately, Trump also said he's worried about whether Musk is doing well and made comments like that. They exchanged reassuring words, relieving the market, suggesting things will be okay from this perspective. Now, Palantir went up by 30 to 40%. Uber plus 1.78, Amazon plus 1.60, Celestica plus 1.59, Alphabet plus 1.51, Taiwan Semiconductor Manufacturing Company plus 0.89, Nvidia plus 0.64, Nextracker plus 0.17, and Trade Desk plus 0.04%. 6 stocks declined. Meta fell 0.52%, Talos Energy 0.59%, and Bitcoin 1%. However, the overall upward trend persists. The reason is it has now risen up to 99,000. With a bit more effort, there will be another chance to test the all-time high. That's one perspective. Broadcom fell 1.07% and Visa declined 2.45%. Lastly, Credo recently showed a sharp rise and then received a technical adjustment. Let me summarize it like this. Recently, the comment section on Mijiwon YouTube channel has been very lively. Thanks to your support, we are seeing good engagement rates, and I want to express my gratitude to everyone who is leaving messages. That's how good the atmosphere of the United States stock market is right now. For 2 consecutive months, tech stocks have been rising as the main drivers. But what about cases like Nasdaq? Since the low point on April 9th, it has surged more than 28%. So, for American and Chinese investors who have built their portfolios mainly around artificial intelligence-related stocks, I think they're probably enjoying at least a 30% surge. Personally, that's what I'm expecting. That means the investment risk or the valuation risk is gradually increasing. You could interpret it this way from a historical perspective as well. So today, So, let's take a look together at whether this positive atmosphere can continue and what the outlook is for the United States stock market. First, the title is quite positive. The return of big investors, also known as smart money, as strong buyers in the stock market, is a very positive development. It's worth examining the implications of this trend more closely. Large institutional investors, the so-called big hands, are increasingly participating in the United States stock rally. The S&P 500 index is holding above the 6,000 mark and is once again approaching its all-time high, which it set in February. It may be hard to believe, but institutional investors are quite optimistic right now. This is according to Nicholas Colas, co-founder of DataTrack Research. There is something called the State Street Institutional Investor Risk Appetite Index, and Nicholas Colas explains that this risk appetite index is now showing that big money is just starting to get back into the market after a recent lull, which signals a further melt-up in the near term. Now, this is the chart. As you can see here, it's called the Risk Appetite Index. The chart indicates investors' risk appetite and their willingness to take on risk. Now, there's a midpoint. Here, if the graph goes up, it means that the preference for risky assets like stocks is increasing compared to safe assets like bonds. That's how you can interpret it. Recently, we've been able to directly see that the preference is rising sharply. Now, this is Nicholas Colas. Institutional investors have been reducing their risky positions from March to mid-May 2025. This was the longest period since September to December 2023. I'm providing you with this analysis. Now, if we take a look at what happened from September to December 2023, it should be quite interesting. Now, let me show you something here briefly. Please take a look. The stock price, which hit its peak in July 2023, has been gradually declining since then. The lowest point was in October 2023, and after that, you can see that the stock price has been steadily rising. Now please follow along and look here. From September to December, investors were extremely negative, with the most negative sentiment in October, which marked the bottom. This is how we can interpret the situation. But now, from March to May 2025, it was said to be very negative. That's why April is likely the bottom. After bottoming out in April, we see a rapid upward trend beginning in May. The events from the latter half of 2023 are repeating themselves, as is evident. Now, accordingly, this kind of risk alert is appearing as we approach a short-term high point. This could emerge in the second half of June. Now, this is a negative sign. What I'm saying is, because the current preference for risky assets is rising sharply, in the end, within a few weeks, we will likely hit a peak, a short-term high point. That's what I'm talking about. That point will come in the second half of June. Today is June 10th. That's what I'm referring to. The stock market will likely rise for the next 2-3 weeks, but then may undergo an adjustment period. We should keep this in mind. The S&P 500 index reached its highest level since February, closing at 6,036 points on Friday. In fact, compared to the all-time high, it's only about 2 to 3% lower. The high point is ahead, and if it surpasses the all-time high, a new record will be set. Because it's about to cross that tough resistance line, the momentum could be further strengthened. This is something we can look forward to. So, just like what you see here, a melt-up is possible. This is something we can look forward to. A melt-up happens when investors, fearing they'll be left out of the rally, rush in and buy aggressively. It refers to a situation where the market rises sharply to a level that seems unsustainable. According to the article's forecast, the current outlook for the United States stock market is very positive. So, after surpassing 6,000, there's a high possibility that it could reach an all-time high in a short period. And if it does reach an all-time high, there's a high chance that a bubble could suddenly form, causing stocks to surge rapidly. If that happens, stocks could shoot up and completely break through the resistance level. Then, at that extreme resistance level, there's a high chance of a sudden sharp drop. That's how it could play out. And also another point is that the index has recovered to the 6,000 line. The consensus earnings estimate for 2025 is now at $264. So if you divide 6,000 by 264, the price-to-earnings ratio, or price-to-earnings ratio, comes out to 22.7 times. Now, when we look at it historically, we need to consider how high 22.7 times actually is. To invest in United States large-cap stocks currently, you must believe their valuations will continue to rise. 22.7 times is considered a very high level. So from here, it seems a bit difficult for prices to go up even further, but you need to have the belief that they will rise even more in order to buy right now. This is how you can interpret the current situation. Let me show you the historical average. The chart you're looking at now shows the forward PE ratio of the S&P 500. The number at the top of the chart is 22.45. And below that, you'll see the 3-month average is 21.79, the 6-month average is 22.35, the 12-month average is 22.96, and the 5-year average is 20.79. So 22.45 is quite a high level. If you briefly look back at what happened in the past when it rose to such a high level, it would be interesting. Here, there's a peak, and it once went up to 23.4. That was in December 2021. I'm sure you all remember. The bear market started in January 2022, and that was the peak. So, if the S&P 500 Down's forward PE goes over 23 like this, it's inevitable that stock prices will plummet. This is something we can predict. And then, as you can see here, it goes up one more time. Now, at this time, it was September 2024, and after a brief adjustment, it went up again. Here is the highest point. At this time, it went up as high as 24.32. That was November 2024. So as of November 2024, it's almost at the highest point or a similar level. Now, if the forward price to earnings ratio rises much more sharply than the average, there's a high possibility of a short-term adjustment. In this case, we clearly remember that the adjustment started from February. When the price-to-earnings ratio rises significantly above the historical average, it's not a good sign. You'll see what I mean if you look at it this way. One more critical point is being explained here. It's essential to consider this. According to the data track, unless the S&P 500's consensus earnings estimate is just coming out of a recession in the United States economy, it is almost always adjusted downward consecutively. So what does this mean? When the year begins, various investment institutions set their target for the S&P 500 like this. And if you ask how these target prices are set, they estimate that in 2025, the actual earnings per share will probably be this much. The multiple is set at 22.5. The actual earnings are calculated by combining the results of the top 500 companies to make $264 per share, which determines the target price. That's what's shown here. The current consensus earnings estimate for 2025 is $264. Now, if you look at the past trends, in most cases, the United States economy didn't just go straight up after a recession. These kinds of earnings estimates are usually adjusted downward in the middle, so $264 might drop to $262 or even $260, and that's how they are gradually revised. But stock prices are actually a multiple, right? If the multiple doesn't get adjusted upward and just stays the same, then if the earnings estimates go down, stock prices have no choice but to fall as well. But that's not the current situation. We're discussing a scenario where we're recovering from an economic downturn, not the kind of situation you mentioned. So even if earnings continue to be sluggish for the next few months, by the end of the year, the S&P 500 will become more expensive. So the assumption that stock prices are moving sideways means that right now stock prices are actually quite expensive compared to earnings. In order for stock prices to stay where they are, the multiple has to go up. Currently, the multiple is already at 22.7 times, which isn't low, and there's a high possibility that the multiple will go up even more. It will go over 23. This is how we can interpret its meaning. Even though the global stock market rally has already continued for the second month, institutional investors have remained very risk-averse until recently. At the end of May, they switched to a cautious mode to avoid unnecessary risks. So, as a result, right now, institutional investors, previously lagging, may trigger a sudden melt-up as they concentrate their investments. This interpretation seems plausible once more. Now, and definitely the risk warning signal for State Street, which we just saw, is a kind of graph, right? I looked into whether the S&P 500 tends to form a short-term peak every time this index hits a high point. I can say that a similar case has also been found in this rally, which started in the fourth quarter of 2022. If you look here, July 2023, July 2024, and then January and February 2025 were like that. So, when the risk-on index goes up like this, in other words, when institutional investors start buying stocks in earnest, it can be interpreted as a risk-on signal. Alright, let me summarize. Right now, the momentum of the United States stock market is just too strong. Major investors have significantly returned to the stock market. With this development, we've crossed the 6,000 psychological resistance level, and it's highly likely that we'll be testing all-time highs soon. Now, if we end up surpassing the all-time high, there won't be any more resistance levels. There's a high chance it could increase significantly, especially since smart money has been moving to the sidelines, but now they've finally started buying in earnest. This part is very positive. Despite the current situation, the risk appetite index is rising too sharply, which could lead to a short-term pullback at a critical point. Can you discuss this? For the next 2 or 3 weeks, things may continue to rise sharply, but since that could be a short-term peak, it will be necessary to increase the cash ratio. This is one way to interpret the situation. Now, the current momentum is a buy. Out of the 26 indicators, 1 is a sell, and 15 are giving buy opinions. That's how you should look at it. The stock price chart looks really good. Now, the stock price chart is right here, and technically, it's continuing to show a very strong upward trend. If you look here, you can see the trend line is drawn clearly, so it's rising nicely, at least in the short term. You can see it's holding strong above the 6,000 point level, gathering strength. That's what you can see here. In the end, it will try to break above 6,200. And even if it can't immediately break through, as long as there's strong support here at 5,800, as long as it doesn't fall below 5,800, there will be another chance to challenge, another opportunity to try again. And there's another support line above 5,800 as well. This is the 21-day moving average, currently at 5,917, indicating a potential upward trend forming. The 21-day moving average is currently at 5,917. If 5,917 is broken, there's still strong support at 5,800, suggesting a positive trend could emerge. Of course, if 5,800 is broken, then it could turn into a downward trend, so I want to emphasize that you need to be careful at that point. Everyone, you just listened to one big beautiful bill. This is the large-scale budget adjustment bill that President Trump loves. Because of this bill, there was also a fierce confrontation between Moscow and Trump. Anyway, the most important part of this bill is that it consolidates various tax regulations. So there were several tax regulations created during Trump's term, and a lot of effort has gone into consolidating them. That's how you should see it. The one big beautiful bill is being touted as a means to make America great again, which is the key message being emphasized at the moment. There are actually a variety of different policies included here. Among them, if you look at Article 21, you'll see something important. For example, according to the New Deal, there is a provision to open savings accounts for newborns, for children who are just born, to help them. This is one of the examples included. Now, regarding this, detailed information was announced yesterday, and personally I think it's quite significant news. Please read it once. To provide a better start in life for American children, what did President Trump do? Starting from January 1, 2025 to December 31, 2028, a pilot program was introduced to provide a government-supported savings account with a $1,000 deposit for children born in the United States during that period. As mentioned here, it was initially called a savings account, but it's not a regular savings account. Since it's an index fund, it's actually an investment account. President Trump got this Trump account idea from Michael Dell, the chief executive officer of Dell Computers, and that's how it was revealed. The Treasury Department is putting the initial funds for this tax-advantaged account, which tracks the entire stock market index. The account holder is expected to be able to make additional contributions of up to $5,000 per year. What about this fund? When the child turns 18, they can start making withdrawals. Of course, they can't just use the money for anything right away. It can only be used for specific purposes like education. That's how it works. But if they wait until after they turn 30 to withdraw, then they can use the money for anything. President Trump emphasized that this program will not cost American taxpayers anything. He also said that it will have an enormous sales effect. This kind of pilot program was included as part of President Trump's budget proposal last month, and now it's waiting for approval from Congress. In the House bill, President Trump's account was referred to as the MAGA account. You've likely heard of MAGA, short for Make America Great Again, but this is different. If you look here, it stands for Money Account for Growth and Advancement. So, it's an account that can help newborns grow and develop and support them to move forward. That's how you can interpret it. I'll share my personal opinion while reading this. What is this new investment program called the Tramp account, or sometimes referred to as the Mother account? It's definitely a big topic in the United States stock market. This is how I see it. The most direct impact is that steady funds can flow into the United States stock market. From 2025 to 2028, it is estimated that about 3.8 million to 4 million newborns will be born each year during that period. The government will provide $1,000 per person. If so, around $4 billion could be injected into the market annually for the next 4 years. That's the implication. In other words, the United States stock market will see an additional annual inflow of 550 billion won. Of course, the overall size of the United States stock market is enormous. As of 2025, it's about $56 trillion. So, the initial government support alone isn't enough to move the entire market. However, in terms of long-term and steady capital inflow, it can have a positive impact on the market. That's how I see it. Especially, most of the new funds are likely to flow into low-cost index fund ETFs. They're talking about things like SPY. Therefore, we can expect additional demand to occur in large-cap stocks with low technical ratios and high market capitalization. If you ask what this is about, when investments are made in ETFs, or if investments are made in SPY, there are certain stocks that make up SPY. For example, Microsoft, Nvidia, Google, Apple. When additional funds go into these stocks, that's how you can look at it. And also, parents or guardians can make additional contributions of up to $5,000 per year. In reality, you can contribute more than $4 million to the cap as demonstrated. Depending on how much extra parents contribute, this amount can grow to a much larger scale, as you can see here. This is a method that provides the same amount of support to every newborn. Therefore, wealthy families are more likely to make additional contributions of up to 50 million won, while low-income households find it difficult to make extra contributions. So in the long term, there is a risk that the wealth gap could widen even further. Anyway, the Trump account provides tens of billions of dollars in new funds to the United States stock market every year, supplying additional money that wasn't originally there. In the long run, it funnels future generations' wealth into the United States stock market. Therefore, I would like to summarize that a huge inflow of capital has occurred in the United States stock market. The last article prepared for today is not about the Nvidia topic. However, this is Apple-related news that many of you may be interested in. Yesterday, Apple's stock price fell by 1.21%. A 1.2% drop isn't huge, but there was a slightly concerning aspect yesterday. The reason is that the Worldwide Developers Conference event, which is held once a year, started yesterday. Worldwide Developers Conference stands for Worldwide Developers Conference. Apple introduces various new products and showcases innovative new features at this event, making it a very meaningful occasion. However, yesterday, Apple failed to win over the hearts of investors at this event, and it seems like things might turn out this way if you look at it. So on today's broadcast, through today's United States market video, we'll take a look at what was announced at Apple's Worldwide Developers Conference and discuss why Apple's stock price is currently falling. I think it would be good to listen to this story together. That's all for today's broadcast. I hope today's broadcast was helpful for your investment activities. Your feedback is very important to me, and I would appreciate it if you could leave comments as well. And as I mentioned earlier, the free subscription period for the 2 ebooks is until June 18th, so please don't forget and make sure to subscribe in time to receive your ebooks. Let's keep fighting together until the day we all retire from investing in United States stocks. Have a happy day. Thank you.
Now let's go to the site of Apple's Worldwide Developers Conference. At this time, Apple's keynote is also underway, and we're bringing you the latest updates. What news has come out?
That's right, Kelly. This event started at 1 post-meridian Eastern Time, and as soon as it began, Apple's stock price dropped immediately. It looks almost like a live reaction to the news. If we briefly summarize the main points announced so far, the first one is content unrelated to artificial intelligence, which is that the design of each of Apple's operating systems has been largely changed. It's called recurved glass, and it's a new rounded corner design that gives an even stronger sense of visual effect, almost like virtual glass. If you've used Mission Pro before, you might find this style familiar. And now several artificial intelligence-related features have also been introduced. Unlike last year's major Apple Intelligence announcement, only minor features have been introduced so far, with no significant additions. For example, the live translation feature automatically translates messages sent in a different language in iMessage into the language you've set. This feature can also be used during FaceTime or regular phone calls. But for now, only text translation is available. In the demo video, when someone speaks, it translates their words in real time like subtitles and shows them to you. Artificial intelligence-related feature called Workouts Buddy has been introduced. It's a kind of virtual assistant you use when working out with Apple Watch. During your workout, it sends you supportive messages, tells you how far you've run so far, and informs you about your heart rate and other workout data. What's interesting is that these voices are based on the voices of Apple fitness trainers. Apple has created its own version of Peloton. The event also featured a segment focused on developers. As expected, Apple announced that their own artificial intelligence model can be used directly on devices. This is an exciting part, as it's a feature other competitors still struggle with. In other words, even without an internet connection, you can use Apple's generative artificial intelligence models, like large language models, directly on your device. So it's not dependent on external servers like Meta's Llama or OpenAI's ChatGPT. Up until now, these have been the main announcements. The event is still ongoing, and it looks like it will continue for about another hour. For reference, Apple's share price is currently down about 1%, and just a little while ago, it even dropped close to 2%. It appears to be due to the information revealed thus far.
Thank you. I'm here with Gin Monster from the Robert Blitz Securities Button, Croquette, and Deberta Asset Management. Gin tweet said that after seeing the announcement schedule, he judged that there was nothing to look forward to, so he sold at the right time. Especially artificial intelligence?
Do you anticipate a surprising announcement? I'm hoping for one. But the announcement schedule was already made public at first, and now we'll soon be able to hear the details. They made it clear that Apple is working more closely and secretly with their own models. But honestly, I think the real key is in that part. Over the weekend, Apple released a white paper about artificial intelligence, and the title was The Illusion of Reason. The main point was that current generative models can't actually reason. The reason this is important is because through this white paper, Apple is sending a message that artificial intelligence still has a long way to go. Apple is probably trying to raise expectations for its own Apple Intelligence, but at the same time, I think they're clearly trying to say that for now it's not as amazing as people might expect. Today's announcement might give people the impression that Apple has fallen behind in the artificial intelligence race, but there is also a positive side to it. Apple users still have a strong attachment to their own products, and they probably won't leave just because Samsung or Android has better artificial intelligence features. I think this kind of loyalty can buy both investors and Apple a little more time. So even though Worldwide Developers Conference is unfolding within the expected range without any major surprises, I think there are still parts where we can get a sense of Apple's direction.
Thank you.